This is kind of your job interview with Italy. When moving to Italy, many expats, the vast majority of them, picture this romantic life filled with pasta, pizza, and breathtaking views. But the reality is, what they don't is to anticipate the complex and sometimes unforgiving tax system of ours. The Italian approach to worldwide income taxation is one of the most misunderstood key factors of living in a country. And misconceptions about how it works, how it's applied, can lead to penalties and very brutal experiences. So let's uncover some of the truth facts about real life examples to show why guessing how it works can be very dangerous for your life. So first of all, what does worldwide income taxation mean here in Italy? In a few words, Italy loves to tax individuals based on residency, not citizenship. So if you are considered a tax resident, not just legal resident only in our country, you're liable for taxes on your worldwide income, not just on what you earn within the Italian territory. And you know that to become a tax resident, you have to spend more than 103 days in Italy, you have to register as a permanent resident in municipality, or generally speaking, for the majority of the calendar year, you have to prove that you moved your center of your life in terms of center of interest in our country. So once that you meet any of these criteria, you're fully on the Italian's big brother radar. And so is your income for everywhere, all around the world. And this surprises many expats who simply assume that taxes only apply to what they earn locally. Let's say you're a retired American with a rental property. Let's say Jane, okay? A retired American who spends her days enjoying Tuscany's life. But back home, she rents out her old property for $24,000 a year. She assumes, one way, it's US income, so Italy has nothing to do with that. That's wrong. As an Italian tax resident, she is required to report this foreign rental income on their Italian tax return. And on top of that, more likely she must pay taxes in Italy on this income unless the double taxation treaty allows her to offset some of the US taxes she already paid there. And failing to report this could result in penalties and interest, a very expensive lesson in how wrong assumptions can be. A lot of people also deal with missteps in reporting foreign accounts. Another common misunderstanding that I hear over and over is about declaring foreign bank accounts and investments. Why do you have to do that? Our tax system requires full transparent approach, and tax residents must file the so-called RW form, dealing and detailing all foreign financial accounts, the value of foreign investments at January 1st and December 31st, and any foreign held assets, including cryptocurrencies and trusts. Failing to file the RW form is not just an oversight. It's treated as a brutal, heavy violation with fines that can quickly escalate. And many experts think, respectfully, if I'm paying taxes on my foreign accounts elsewhere, why does Italy care? Well, Italy cares because transparency is the key to the worldwide taxation framework. Let's say you're a freelancer with international clients all around the world. Let's meet Mario, okay? A freelancer who moves to Rome and works with clients on the worldwide basis. He assumes as long as my clients are not in Italy, I don't need to worry. Once again, it's wrong. Under the Italian law, the global earnings must be reported and taxed in Italy, more likely first, and even payments from non-Italian clients are subject to Italian taxation. And this is a complete shock to expats who work under the system where only local income is taxed. And this failure to declare this income could result in, heavy penalties. And I'm sorry to say that, but ignorance will not be an excuse. What is the highway to penalties? We already know the answer. Guessing versus knowing. The Italian tax system is not forgiving errors of any kind, whether international or a one-off. Assumptions like the tax authority will never find out about my foreign income, or will they never find out about my foreign bank account, or I didn't know how to report that, are the special recipe for a disaster. Agreements like the CRS, the Common Reporting Standard, mean that financial institutions all around the world, worldwide, share every information with the Italian tax authorities. If you're hiding income or assets, Italy will likely find out. And non-compliance can result in fines up to 30%, 30, of not declared assets of income. And for late or, let's say, incorrect filings, penalties range from hundreds to thousands of euros. Italian tax authorities frequently audit expats due to the complexity of their financial situations, like an interview. One red flag, such as not filing your taxes in time, or not putting something that you had to, or mismatch in filings, can trigger a deeper investigation unless they found out that you have to pay something more. A lot of digital nomads fall into this trap. Let's say Emily, okay? Emily is a digital nomad. She spends a year between Milan and Bali. I love Bali, by the way. And she assumes since I'm not in Italy the entire year, I'm safe from Italian taxes. But she's wrong again. Despite splitting her time wisely, Emily has registered as a resident in Italy to the municipality. So this status puts her in a very risky position. She has to report worldwide income, including what she earns from her Bali-based remote work. Without understanding the rules, what's happened? She at risk of non-compliance, of course, penalties, audits. The double taxation treaties are designed to prevent you from paying taxes twice as much on the same income, or the same asset if you want. However, they're not an automatic process. Properly claiming tax credits or exemptions involves understanding first how Italian agreements work with other countries, and even a small mistake in how you read and you apply rules and you put the numbers through the lens of these treaties could cost you a lot of money. For example, if Jane, in this case, a retired American, doesn't apply the US-Italy tax treaty properly, she might end up paying tax twice on the rental income. And something that you can really avoid by applying rules. I always ask people if for once rules are on your side, is it a bad idea for you to take advantage of that? Assumptions everywhere in the world of taxes are like stepping on thin ice. People love to think they're standing on a solid ground because it feels like, only to find themselves in deep trouble once that it breaks. Our tax system is very solid and I might say interconnected with global data sharing agreements, making it nearly impossible to wing F without consequences. People still think nowadays in 2024, I'm under the radar, no one will check my accounts. Authorities can and will audit accounts just flagged by global reporting systems. Or I didn't know how to report that income, no one told me about that. But reality is, ignorance of the law is never an excuse. When people say my income is not from Italy, so it doesn't count, if you're a tax resident, it does count. Living in Italy doesn't mean becoming an expert of the Italian tax law. No one is asking you to become one. But it does mean recognizing when you have to speak with someone that has the knowledge to help you out. So remember, you have to find some help understanding your worldwide income that must be reported correctly. You have to avoid costly mistakes and penalties and fines. And yes, if there is some, if you're eligible for that, if you fit the requirements, you have to find out the best way to maximize the benefits from tax treaties and why not exemptions. The goal of this video is not to scare you, but to prepare you, to work for you. Taxes in Italy may feel like a maze, but with the right guide, you can navigate it in the most compliant way. In the end, the dream of living in Italy can remain just that, a dream, without becoming a financial nightmare.